business owners say professional mistakes are one of their biggest business risks. Only a fifth of them actually carry the coverage for it. That gap between recognizing the risk and actually being covered for it is where some of the most expensive claims in business insurance happen. And unlike general liability, professional liability pricing and claims environments generally differ by profession. A consultant and a mortgage broker are not buying the same risk, even if they buy the same type of policy. That difference matters more than most business owners realize when they're shopping on price alone. If your business provides advice, delivers a service, or produces specialized work for clients, you carry professional liability exposure every single day. And here's what makes this coverage different from everything else in your insurance program. The claim doesn't require an accident. It requires a client who believes your work, your advice, or your failure to deliver caused them financial harm. Whether that mistake was real or perceived, the cost of responding is the same. Even completely unfounded professional liability lawsuits routinely cost tens of thousands of dollars to defend, with published industry estimates ranging from roughly $10,000 on the low end and up to $75,000 or more for a fully litigated claim before any settlement or judgment is even discussed. Professional liability insurance, also called errors and omissions or E&O insurance, is a coverage that protects your business when a client claims your professional services caused them financial loss. In plain terms, if a client sues you for a mistake, an omission, a missed deadline, a misrepresentation, or work that didn't perform as promised, professional liability is the policy that responds. It covers legal defense costs, settlements, and judgments arising from those allegations. And it covers them whether or not the claim has merit, because the cost of defense begins the moment a lawsuit is filed. The professionals most commonly associated with this coverage includes consultants, technology companies, financial advisors, accountants, real estate professionals, architects, engineers, healthcare providers, lawyers, marketing firms, and insurance agents, and even businesses that delivers expertise or specialized work for a fee. But the reality is simpler than just a list of professionals. If a client can point to your work and say this caused me financial harm, you have professional liability exposure. And general liability, which covers physical injury and property damage, does not cover it. Pricing in this line varies more by profession than almost any other coverage. A low-risk personal service business might pay under $100 a month, while a business in a high-stakes advisory role can pay 2 to 3 times that for the same exact limits, simply because the average claim size in that profession runs higher. That's not a reason to underinsure, it's a reason to make sure the policy limits match your actual client contracts, not just the cheapest quote. Where the education matters most, because professional liability policies are not standardized. Unlike general liability, there are no universal policy forms. Every carrier writes their own, which means exclusions vary, coverage language varies, and what one policy covers, another may not. What professional liability policies typically cover are claims of negligence in professional services, errors or omissions in your work product, misrepresentation, failure to deliver a promised service, missed deadlines that cause client losses, and a legal defense cost associated with all of the above. What it does not cover is bodily injury or property damage. Those belong under a general liability policy. Employment-related claims, wrongful termination, harassment, discrimination require employment practices liability coverage. Intentional wrongdoing or criminal acts are excluded outright. And claims arising before the retroactive date brings us to the single most important structural feature of this policy that most policyholders never fully understand. Professional liability policies are almost written always on a claims made basis, not an occurrence basis like general liability. Here's what that means in practice. The policy must be active when the claim is filed, and the alleged act must have occurred on or after the policy's retroactive date. If you cancel your policy today, you could have zero coverage for your work that you did last year, even if the claim comes in tomorrow. If you switch carriers without preserving your original retroactive date, the gap between your old work and your new policy start date may be completely uninsured. One more critical detail. In most professional liability policies, defense cost reduces your available limits. If your policy has a $1 million limit and your defense cost is $300,000, only $700,000 remains to pay the judgment or settlement. This is why adequacy matters as much as having the coverage at all. A management consultant is hired to improve a client's operation. The client implements the recommendations, results fall short of projections, and they sue for the loss of revenue they expected. The claim is filed 2 years after the engagement ended. Professional liability responds if the policy was continuous and a retroactive date covers the original work. A technology firm delivers a software platform that fails to perform as specified. The client files a claim for developmental costs and business interruption losses. Tech E&O, a form of professional liability, covers the defense and potential settlement. A real estate agent is alleged to have failed to disclose a material property defect. The buyer files a suit a year after closing without continuous E&O coverage. The agent and their broker absorb every dollar of defense costs personally. An accountant prepares a tax return with an error. The client faces penalties 2 filing cycles later and sues. If the accountant let their E&O lapse in the interim, there is no coverage because the policy in effect when the claim is filed must have a retroactive date that covers the original error. A marketing agency signs a client contract that requires a $2 million E&O limits. The agency's existing policy carries $1 million because that's what it had when it was a smaller shop. Nobody flagged the mismatch until the client's legal team reviewed the certificate of insurance and rejected it days before the campaign launch. Now consider the same scenarios when the policy is written for a different description than what the business actually does, and the carrier denies the coverages on the basis of the work falls outside of the scheduled services. This is not hypothetical. It is one of the most common claim denials in professional liability. We see professional liability policies placed incorrectly more consistent than almost any other coverage. Services described are too narrow, where the policy schedules only some of what the business does. When a claim arises from an unlisted service, the carrier denies coverage. Retroactive dates are missing or set incorrectly, particularly when switching carriers for price. The new look policy looks cheaper because it's covering less. The gap in prior act coverage is invisible until a claim surfaces for older work. Limits insufficient for contract requirements. Many client agreements specify minimal E&O limits, and when the policy carries less, the business is out of compliance with its own contract before a claim ever happens. Defense cost eroding limits are not accounted for. Businesses assumes the full policy limit is available for judgment. When the defense costs have consumed a third of it, the surprise is sufficient. No extended reporting period arranged that policy in. When a business closes or a professional retires, the claims made policy ends, but liability for past work doesn't. Without tail coverage, a claim filed after the policy terminates has no coverages, and policies placed without reviewing what the business actually does because the professional liability has no standard form. A policy that looks complete may have exclusions that eliminate the most likely claims for that specific business. At Corey Washington & Company, we take a detailed approach to professional liability placement. We review the services you actually provide, not just your job title or industry category. We examine the contracts you sign, the client expectations they set, and the exposures they create. We evaluate retroactive dates, make sure the limits are accurate, defense cost structures, and specific exclusions in every form we place. Then we structure coverage so the policy protects your reputation, your revenue, and your ability to keep operating. Not just when everything goes right, but specifically for when it doesn't. When your business depends on your expertise, the right protection matters. If you provide professional services and you are not confident in your E&O coverage is built for what you actually do, that's exactly what we do. Click the link in the bio. Let's build your program the right way.